we are just getting it kicked off. Chris decided to abandon me, but he decided to chime into the stream. No, I'm just messing around. He's just grabbing a little bit of water real quick, and I realized that in the background, I completely forgot to add some of our little details that we like to have. So let me just add these really quick so that way you can be sure to join Chris's Patreon and be able to follow him all over the interwebs on Twitter, all those things. So today I wanted to gaslight Chris because he told me that inflation was going to 100%. And with that, he lied to me and my emotions are just all over the place. So Chris, explain yourself.
Dude, it's either 0 or 100 for you, man. I don't know what in between. What the hell? It's never any in between. All right. First of all, I said inflation would be higher, which it clearly was, but just not as high as a lot of people were expecting. So, it's funny that we're celebrating things that are like, oh, they're not as bad as we thought they were going to be. That's not really something you celebrate about. It's like going to a shitty restaurant and being like, you know what? This isn't that bad. It's like, no, you're still at a shitty restaurant. You know what I mean? So I think inflation right now is something that we just have to keep our eye on. The market is still, depending on what stocks you're looking at, kind of overvalued. So right now, good times to be in companies that are value-based rather than being growth-based. Because with inflation still being somewhat higher than, well, technically higher than what the Fed wants, the likelihood that we get any rate cuts anytime soon is starting to get pushed out further and further into the cycle. So any businesses that are impacted by higher interest rates over the short term are going to stay that way for, I think, a longer period of time. Because, I mean, you remember earlier this year, everyone was saying, oh, inflation's going to go, they're going to start cutting rates in the second half of 2023. That shit is being pushed out to now to 2024. So, just to keep that in mind.
I'll just say, I mean, to interject here, it's like I've just been completely wrong on this whole process. I remember in the beginning of 2020 or the end of 2021, when they were just talking about starting to raise interest rates again, I was just like, oh, there's probably only going to be 2 to 3 hikes in 2022 because I was just like, I don't know if the market can handle it. It's fragile. Generally speaking, we don't go as quickly as we have. I was completely wrong on that. 2022 was a goddamn whirlwind. And here we are in 2023, almost doing the same. Like I was expecting maybe by the end of 2023, it'd be at like 3%. I did, once I kind of realized what was going on, I was kind of anticipating we'd get to like the mid 5s. And that's kind of where we were. But that was after being completely wrong at the end of 2021. So just interesting. But you're probably going to go into it. But I'm kind of curious. Some people might see that headline number of 3.2%. And I want you to kind of coach people, educate them on why it's not really 3.2% and why things are kind of reaccelerating from an inflation perspective.
Well, the first thing is it's data that's looking backward, not forward. So we've had the acceleration in oil prices and they've been constantly going up. I mean, you're clearly in the oil industry, so you already know, right? And there isn't any sort of indication that that's being let up anytime soon. So that's the other thing that's kind of worrying a little bit as well. The consumer is holding up relatively well considering the rates where they are. But I wonder if this is actually consumer strength or is it just another credit bubble that might be coming around where people have had access to so much credit over a long period of time that they're utilizing that. And then there's also some issues that may be coming for us. One of them is the restart of student loans. I wonder what's going to happen then. Like people are going to have to start paying those back. And yeah, I think a lot of policy that we've had were very accommodative for a long time. And so people were able to kind of build up a nice little reserve, and some of that reserve is being utilized right now to keep the economy going. The other thing is when it comes to inflation, unions and employees have a lot of bargaining power right now that they might not have had in the past. And so with inflation higher, they can go to the employers and say, look, we need to get higher wages. And, that's one of those things that the Fed is actually concerned about because wages are sticky. I never come across a situation where wages have gone down on the wholesale level. It's usually always going up. So the thing is, as wages accelerate as the aggregate, that could be bad for us in terms of inflation, because that means that the expectation of inflation will cause inflation to keep going. So I would
Right.
say I would say we're at a point right now where the Fed is kind of stuck in a pickle, where the inflation rate is not at the target that they want, which is 2%, but it's not that bad. So it's like, man, what do we do? Do we keep tightening to get to the
Mhm.
2%, or do we just live with 3%? Which is normal, or how do we proceed? So a lot of the Fed people right now, they came out this week and said, let's just pause. We don't really need to go any further. So
Right.
a lot of those comments were good, but you know what? One thing that surprised me today, uh, well, technically it didn't really surprise me. It's one of those things that I was very curious about, was how would the market react. So you saw in the morning time the market react very well. Oh my god, it's not as high as we thought, to the moon. And then all of a sudden everything came back down again,
Right.
right? Because what it is the market's forward looking, man. And I think a lot of people, they see the frothiness in the market, and they're taking their money out of speculative names, and they're moving into value based and higher quality companies that have reoccurring revenues, that are trading way under book, and actually trading at very low multiples. And I think that's where we should be heading as retail investors as well. So just, keep follow the big guys. I know sometimes, like, we're always, like, as retail investors, looking for the like the 10x. Right now, it's probably not a good idea to look for the 10x positions. Right now, it's probably a good idea to find those value companies that are in the process of adjusting their businesses to make money, so that they can use that money to buy back shares, and they grow steady over time. The essence of growing your portfolio isn't growing it tenfold overnight. It's to do it over a long period of time. And also, the one other thing is, and this is something that I spoke about on my Patreon, the importance of maintaining some liquidity right now. So just keeping cash on the side, because if shit were to hit the fan, you want to make sure that you have money to average down, or to go into some really good companies that may have been unfairly sold off. And that's where I'm aligning my portfolio pretty much. Just some of it is in cash, some of it is in some really undervalued companies that I think have a story going forward. I do still have some growth names in my portfolio, like Google. Google, in my opinion, is like half growth, half value, which is
Yeah.
perfect.
Yeah.
They're still growing, but they're still generating a lot of cash, so they're buying back shares, so they're technically undervalued. And so rarely do you find opportunities where you get both things. You get capital appreciation and sometimes even a dividend. So, like, there's other companies that we can talk about that are in that space. And yeah, I think we can talk about that further. What do you
Yeah.
think?
I was just kind of reiterating a lot of what you kind of highlighted, right? Like the student loans coming back, consumer debt is over $1 trillion on credit cards. So if you start seeing some of these chinks in the armor, like it's not 100% like you're out of the woods, like you said, right? And I still think that there's
Mm-hmm.
another foot to kind of drop when it comes to these sorts of things, and trying to position yourself for a ride. I think we've already started to see a little bit of a pullback. And if people think this is a big pullback, it's not. I love it when the market drops like 5% and people start running around with their heads chopped off. It's pretty funny. But I think people get accustomed to recency bias very quickly. And I've been smacked in the mouth a few times over the past 10 years to kind of recognize what comes up must come down at least a little bit. So these sorts of pullbacks are kind of warranted. In fact, I'm surprised we didn't go down a little bit further. But I think I'm a little bit surprised, to be very frank, about where the headline number kind of came in today. And how quickly we've kind of got back down to where we're at in the threes, and I guess depending on what you're looking at, the fours. Um,
Yeah.
so it's interesting as a whole. I would have anticipated us being closer into the late 4Q timeframe before we really started seeing these numbers. So it just makes me feel like you said, and this was always kind of a risk. It's like it's almost too good to be true that you're gonna start seeing a quick turnaround on some of these things. Like in the numbers today, we've like you are alluded to last week, or maybe it was earlier this week. The shelter reacceleration of cost of
Mm.
shelter, and that kind of being a big driver as to why things are kind of back on the rise, and then oil price as well. But you think about it, I mean, it won't take much. If oil goes back, let's just say there's another foot to drop in any of these global crises that we have, geopolitical crises, whether it's Taiwan or a bigger invasion of Ukraine than we've already seen, you know, oil price has the opportunity to go back up, right? Because it becomes more and more demand. So it's just an interesting time right now, and it requires a lot of balance. And I think one thing that I was watching a chat the other day, it might have been All In, about basically how much in crap and debt and the downgrade of the U.S. debt. And Shamath was just like, if you think we're bad, look at everybody else, right? Japan's got over 200% debt to GDP. And it's just like, we've pretty much since 2008, like, yeah, we might not have done the best things with TARP and all that stuff. And same thing with the COVID stimulus packages. But at the end of the day, like the stability that you have in the United States based off of the great products and companies that we have that stabilize our economy. You look at some countries out there, all they have is one export or two exports that they can really rely on to truly hold up their economy. While we import a lot from China all over the place, at the end of the day, we still export a lot of knowledge and opportunities and innovation globally. So anyway, wild tangent, but there you go.
No, it's perfectly understandable. And so I think that's where you have to look for opportunity where others don't see it, you know. Right now, I think the best opportunity in the market, believe it or not, is still the banks, like regional banks. I think so many people have written them off. They don't really understand how the banking system works. They don't know what to look for in a bank to make, you know, understand what the safety levels are for it. And so, and I don't blame them by any means. You know, banking is one of those things that you really have to dig deep into their numbers to find out what it is. And there's all sorts of regulations around how they operate that you have to be a little bit familiar with. So a lot of my due diligence on the bank specifically goes into that. And so it's a very interesting field. And it's one of those sectors that even though everyone hates it, you kind of need it to be strong. Otherwise, you know, your economy shit. So you need the banks. So right now, I think everyone's like missing out a little bit on the bank side. But the thing is, you can't just go with JP Morgan or you can't just go with Wells Fargo. This is where you have to dig into the sort of smaller banks because that's where a lot of opportunity is. So there was actually an interview that Bill Nygaard, who's a really big value investor, did a while ago with the regional banks. And I was doing my due diligence at the time. And that's one of the things, a lot of value oriented investors are actually buying up regional bank stocks right now. You know, it's not one of those things that's like announced like to everyone, like, oh my God, this is what we're doing. But if you look at the performance of some of the banks since then, it's been crazy. Like, let me just tell you like what some of them are off of. And these were all covered on an episode that I did with the guys in the past. So this is what I have in my portfolio, and these are the banks that I'm particularly interested in. And they've done fairly well. One of them, of course, is Truist. That one is the most famous one that I have because I explained that one on Finance Junkies to my co-hosts and stuff. The other one is Comerica. Another is Regions Financial, which is big down south. Another one is Key Bank. And the last one is Zion Bank. Of them, they've all done particularly well over the last 3 months. I think Zion is up about 50% in the last 3 months. Regions is up 25%. Comerica is up 39%. And Truist is up 7.8%. The good thing, though, is that each one of them has their own valuation that's really low, and it's still low, but they also pay really good, hefty dividends, which are very well covered, right? So this is one of those things that you can just hold on to. You're getting paid dividends, you're getting paid capital appreciation. That's a rare thing to get, you know. And then, of course, you have like some of the other sectors too, like where commercial real estate. Like, so I have a commercial real estate that you have as well after we had our conversation, which was SLG, which is SL Green. And it's funny because I'm still seeing a lot of REITs right now that are trading way below book value. Now, there's one particular REIT that I'm doing a lot of due diligence on they have exposure to New York City, and they have a lot of exposure to California, to San Francisco in particular. And even,
Interesting. I know you're
yeah.
probably going to state it. Maybe you won't. Maybe you'll save it for your
Mhm.
Patreon members. But I know who you're talking about just based off that statement.
No, no, you can say it. Well, which one is it? Which one do you think it is?
Vornado.
No, Vornado is mostly in New York, but no, that's not the one.
I thought that they
Actually, the
also
one
had some in San
they
Francisco too.
do,
No?
they have some in San Francisco and some in Chicago.
Okay.
But this one is not one of the ones that a lot of people think about. They actually are a smaller REIT. So I'm not gonna say who they are because I don't want people blindly going into them. I'm still doing my due diligence,
Like
guys. So
everybody
I'm not gonna.
with
Yeah,
SLG, huh?
yeah.
Yeah.
Um, the point that I want to just highlight is one of the things that I've been tracking is just the overall outrage of the people in San Francisco to make the changes, right? And also the tech community. One of the things that
Right.
you'll find about San Francisco is they have a lot of influence. The tech communities heavily influences political decisions in the city. If you're watching on YouTube and you're thinking, man, San Francisco looks like a garbage place, I wouldn't want to live there. Guess what? These people, they have their headquarters there. They live there, right? They don't want this shit to continue,
Yeah.
right? Even if you're the most liberal person in the whole wide world, I don't think you want to see your grandma get beaten over the head and robbed. So these are the kinds of things, these quality of life issues that San Francisco has kind of overlooked are starting to come to a head. And it could be an opportunity where if you are willing to take that additional risk, um, you could end up buying some really good REITs that have commercial exposure in San Francisco, and then ride the wave higher once all of this stuff passes. A lot of it, though, unfortunately, is controlled by what's that thing called, by
Rent
politicians that
controls
are kind
or
of like,
okay.
no, politicians that are like really entrenched. But what you're seeing is this public backlash is actually growing. So like an example was there was a DA in San Francisco, Chesa Boudin, who got recalled. Right, normally you'd never see something like that happen, but the dude was actually successfully recalled. And I think the next set of politicians that are going to eventually get elected to San Francisco are going to come with a platform of being tougher on crime, tougher on quality of life issues, not letting homeless encampments grow everywhere, and particularly the Asian community, which I think usually heavily leaned towards the left, is actually starting to be impacted by a lot of the negative aspects of what's going on. And they're starting to kind of say, you know what, we don't accept this anymore. We need to move to the other side of the aisle when it comes to this particular issue. And that's a natural ebb and flow of how like cities work, right? You've always have this pendulum swinging back and forth. So if you look at like New York in the 1980s and early 90s, it was, you think San Francisco is bad now? Bro, I dare anyone to go back to New York City back then. That was like, dude, that was bad. So San
Mhm.
Francisco, with all of its problems right now, it's not like you can't save it. And there is a very determined group of individuals who actually have a lot of money and also have a lot of interest in seeing the city come back to life again when it comes to a healthy and vibrant tech sector and also a healthy and vibrant community. So I think once you realize that, the shit is not going to be like that forever, it could be a good opportunity to get in early. The question that you have to just pose yourself when you're investing in companies that are like REITs and stuff, and you know this very well, is that how much cash flow are they generating and can they survive? And like what kind of terms do they have on their loans? Because like if they don't have enough cash to survive and they have a refinancing round coming, they can go bankrupt, in which case now you're going to lose out, a lot
Not
of
only that,
your
but
investment.
like, and
Yeah.
this kind of goes back to the regional bank part that you were talking about, which is, you might see a price to book of X, right? But if the
Mhm.
assets that are on the books get cut in half because nobody wants to rent them, they're C class properties and they're not in the premier part of New York or
Yeah.
not premier part of San Francisco, you're screwed, right? Nobody's going to rent them out and you're just going to sit. And, it also depends on, what, like you said, what terms you have and how long of a wavelength they have until a lot of these loans are really due.
Mhm.
So they might end up having to sell those. Like, this is the problem is like, let's just say they have a bunch of loans due next year and they have C-class properties. Next thing you know, they're wholesaling stuff. It's like, well, nobody's going to be buying C-class properties right now. If anything, people are going to be looking for trophy properties, B plus sort of properties that they could convert maybe to A sort of properties, right? It all goes back to that long-term appreciation aspect of these businesses, and also the cap rates that these companies can get. If they can add a little, they could get something that's a mid B and add a little bit of capital to it and make it an A-class property and increase the rent. All they have to do is take whatever cap rate that they can afford for a Class A property, and they just increase the value of the property by X amount, right? They can then sell that down to somebody else and use those proceeds to help pay off some of the debt. It all just kind of, so when sometimes people look, it's like a lot of some of these crappier banks that took on way too much risk and that got a lot of these companies, or these regional banks in problems in the first place, like Silicon and all that. The reason why they might have been trading at a low price to book value is because what might have been reported as assets in the past have not been written down yet. And so you have to think about that. Back in the not the great financial crisis, but the pandemic, I was looking at Wells Fargo. Wells Fargo was trading at, a 70 cent, on the dollar sort of book value, recognizing that some of those assets will probably have to be sold at a discount, or they might be written down. And then recognizing that a lot of other banks might have been trading at, 60 cents on the dollar or 50 cents on the dollar. JP Morgan at the time, I don't think ever went below $1 for a dollar sort of price to book ratio. But it just goes back to sort of show you the strength and what you're looking for. So when KRIS is talking about some of these things, you can't just be like, oh, medical properties trust is dirt cheap right now. It's like, well, what kind of assets do they have in the books? Do people even, like, are these in, like, all these were started by doctors, right? So it's like, are they uniformly just buying up any sort of like family practitioner office? Some of those might be in the hood, some of those might, they might not be the best of properties, versus if you're looking at, what KRIS showed me, which is SLG, you have really high quality properties that are always going to be in demand, that have really good lobbies that people will actually want to go work in. Nobody wants to work in a dungeon anymore, right? Everybody that has to go into the office, they want to have a nice, bright lobby. They want to feel like they're proud to be there, right? Nobody wants to be in these crappy dungeon-like buildings that were made in the 80s where they put you in cubicles. Everyone wants open office spaces and, all this fancy crap. So anyway, just a thought.
Yeah, the expectations are much higher for employees and employers themselves. They understand the value of, if they need to do recruitment, they're going to want to have an office space people want to work in, right? So if you want to, especially when it comes to certain industries like AI, right? I know sometimes we watch these YouTube videos and we see like the tech workers kind of just chilling, and it's, everyone's like, oh my God, you shouldn't. That's like the fringes. When it comes to like hardcore, really, really smart tech workers, especially in the AI field, dude, some of them are pulling in a million a year, because just the sheer value of their talent is so much. So the thing is, like, if you're asking that person to come to the office, like, they have multiple offers. Like, intelligent people have multiple offers where they can go anywhere. So in order to attract them, not only do you have to attract them in terms of pay, but you also have to attract them in terms of like where they're going to be working, proximity to like city centers and cultural centers, right? Because I mean, yeah, you could live in the middle of Idaho, or you could live in the middle of New York City. People are going to choose New York City because you get, especially when you're younger, you're going to choose like the ability to go to all these new restaurants. You're going to want to, go to a Broadway show, maybe like go hang out and have brunch on the weekends. Go because of the proximity to like a large major airport to travel the world. I mean, these are all considerations that the young urban professional who has a lot of talent and has a lot of skill, they're all going to be looking for. And so the cities are the ones that can provide that, right? And so companies are going to usually cycle back to environments like that. New York City, of course, because it had such a diversified economy, wasn't nearly as impacted as San Francisco. Like that's one of the main reasons why I thought SLG would be a great place to, great company. So as I was doing my due diligence, I looked at the assets that SLG had. I looked at the quality of the management, quality of the company, the quality of their balance sheet, and also their business overall and what kind of cash flows that they had, how they were going to model for future cash flows. And that's what attracted me about them. And so I'm looking for a very similar thing with this REIT that I'm looking at that has exposure to California. One of the things I like about them is that the properties that they have, believe it or not, in the last 9 months, they actually bought properties, which is rare because you would think like a commercial REIT that's down so much from where it was before. It's trading at 30 cents on the 30 cents on the dollar book value. So you would think, wait a second, why is this company making acquisitions? Like that's dumb. These guys are gonna, lose it. But then when you look at the numbers, the numbers look great. Like they don't have an issue with leasing their properties because they have high quality assets. And the assets that they bought at a significant discount, and they have redevelopment potential to be turned into mixed use. Because I think that's the other thing that's happening, where you're no longer seeing the high rise office tower becoming like the preeminent structure that people want to be in. It's more along the lines of, hey, I want to have a building that has mixed use where it has like a soul cycle at the bottom, has some office space on the second floor, and then the top floor has like penthouse apartments slash condos with a roof garden at the top overlooking the city. Like, when you think about it, you're monetizing all of those avenues, but you're not doing one wholly. So you're not 100% dependent on your anchor tenants at the bottom. You're not wholly dependent on your office anchors in the middle. You're not wholly dependent on your condo slash your renters and the rent side, right? So all of those things are being developed so that now you're getting this diversification of asset all in one building. And so it's a really cool thing to see. And it's actually nice to see that because it's addressing multiple problems at the same time. Because what it is we have an oversupply of office, so they're trimming away some of the office, right? And converting it to residential. The residential portion is what's really needed in parts like San Francisco. The what is that thing called? The rents in that part of the city are just fucking crazy, man. You ask anyone right now what, even with all the quality of life issues, what the rents are like in San Francisco, they're nuts. And even parts of Oakland now, which you normally historically were like untouchable areas where people would be like, no, I'm not living in Oakland. Now people are being kind of like subjected to this wave of growth. So they're moving further out into the edges. So I think these are the kinds of opportunities that, like, if you really dig down, you can find them. And it's good to see where they are. The only thing that I would say holding me back right now from really making a capital commitment to them is kind of like twofold. One of them is the rate environment still a little bit uncertain, right? And they have some debt that's coming up due in, I think, a couple of years, which I think they'll be easily able to refinance. I don't think that's an issue. But also the quality of life stuff where businesses were leaving. I want to see more businesses come back. That's the key right there that I think. And that's what I'm starting to see when it comes to like YouTube. Not just YouTube, Twitter and stuff. You're seeing guys like Gary Tan mention that, Y Combinator is going to be doing more stuff physically in San Francisco, right? So workers are starting to come back. Then you have like the major companies making in-office return to office mandatory at least part of the week. So a lot of people who thought, hey, I could move to a low-cost city somewhere in the Midwest and keep working from there, they're all coming back. And unfortunately for them, this is the model that's being adopted, which is hybrid work. So one of the things that you need for hybrid work is you still need the office and you still need the homes, right? So that's where companies that are investing in mixed use could really benefit, because what you're going to see is scaled down offices, but you're also going to be, you're also going to see development of new homes and condos and stuff. So it's a very cool dynamic that to look at. But I have to really do more due diligence on waiting until I start to see those structural changes happen in San Francisco that allow for companies like this to succeed. The other cool thing is, and I'm sure you know this, but real estate investors have an outsized say in local politics because literally it's their business. I don't know if you've ever dealt with that before, but if you look at like
Not so
SL
much.
Green, you look at Vornado, all of them, they are politically connected because at the end of the day, the businesses are what pay the cities their occupancy. The workers pay for lunches and everything. So there's a huge tax base that these guys are responsible for. So if you don't stay friendly with the business community is going to leave. So the business community, especially the landlords, are always going to have an outsized say in local government politics. And I think now you're starting to see, because it's actually impacting their bottom lines, it's actually starting to become a bigger issue. And so I think from that angle, San Francisco could possibly see a resurgence in occupancy, but it's going to take some time. So yeah.
Hmm.
Yeah, so these are the weekly average office attendance numbers.
Yep, dragging behind. San Francisco is the most prominent of the lines
Mhm.
here. You can see it's dragging back, and this is kind of starting from the midst of the pandemic back in April 2020 to now, and you can see the dips. Some of these dips are for holidays and stuff of the like, right? So it takes a little bit
Yeah,
of time for some folks, or second
yeah,
waves as well, for people to kind of come back in. But
yeah,
you can see New York is hovering between 60 to 70% with a little bit of dip here, probably because of the summertime. But
yeah,
curious if it kind of starts to go back up once we exit summer and go towards the holidays.
yeah.
But
No, I think so. You can see it historically. If you look at the historical thing, the dips, you can usually track them right around the summertime. So you see that dip, like around June, even in New York. That's what happens, right? In New York, people go to the Hamptons, they work out of the Hamptons, they go to Westchester. Because of New York finance industry that typically have an outsized presence in the city, that's what you typically see, right? So
selling
it's
Maine,
a
go
it's an
away.
interesting dynamic, huh?
Selling Maine, go
Sorry.
away.
Yeah, exactly. So it'll be an interesting dynamic to see. But even this is a little bit misleading in that this doesn't aggregate assumption, right? It doesn't show you what the total is on a per class basis. So I can almost guess that if businesses are paying class A rents, they're utilizing class A level, they're utilizing their offices way more than if you have like a class B and class C lease, who you
Right.
can just kind of like wait until it expires. What did that person put up real quick? I just want to see.
Said something about
Brookfield.
Brookfield. Yeah.
Yeah, Brookfield's good. Brookfield's one of the bigger ones. Brookfield just had their earnings this morning. The letter to shareholders was incredibly valuable when getting behind the scenes. Look into most. Yes, yes, I agree. I agree. Brookfield is really big. They're really not a. See, a lot of times people, because they never hear these names, they don't think about them. But Brookfield probably has more influenced more people's lives than some of these other little companies out there, because they own so much real estate across countries, not even just the US, but across countries.
So do you think
So
that there's still going to be a second wave of folks coming back to the office for in like the San Fran area because of we've heard Zooms going back to the office, but I feel like some of these at this point are kind of late movers, right? Do you really see a large wave of people that have been working from home now having being forced to go back to the office? I feel like that was kind of the trend over the past 12 months, kind of the mid 2022 to mid 2023. But I feel like if they haven't really announced it yet, I feel like the majority of folks have. And if they haven't yet, I feel like it's going to be a few and far between. Like Zoom, I think is kind of an outlier, right? But maybe I'm wrong. I don't know.
well, you know what it is. Believe it or not, a lot of businesses they want their employees back in the office, maybe to micromanage more because they're seeing productivity drops. I can't say for certain. I think every company's evaluating that on an individual basis. My thinking though is that because of the nature of like how the tech sector is very limited by um who they can hire as employees, the employees have a lot more say in their ability to fight a return to office mandate. So I think you're seeing that a lot of that happened with Amazon, with Google, where these companies announced that, hey, you need to come back to the office, and the workers just said, nah, fuck that, I'm not coming. And basically, if you had a problem, deal with my team lead. And so a lot of people were just like, man, we can't lose this guy. What do we do? And so they would make special provisions for one person, and another person would catch wind of it. And so, there was this area of grayness where a lot of employees were just like, I'm going to fight this tooth and nail not to go back to the office. And slowly, because the economy is turning, we're starting to see that those bargaining powers are slowly starting to go away. So, that's why you see in a lot of big tech, they're doing layoffs. Last thing you want to do is fight an employer who's doing layoffs. Because if you want to land yourself on the top of the list on losing your job, go ahead, say I'm not going to come to the office and see what happens. You'll be piped faster than, yeah. Sorry.
I was gonna say, do you see a large, I don't know about for your company, but do you see a large pendulum swing when it comes to like natural disasters? And then they kind of give the employees a little bit of freedom. Like, for example, with the pandemic, they're like, yeah, you can work from home remote. And, they'd accept the fact that, okay, this person has COVID, so they'll not let them come into the office for 3 weeks. And then it's almost like, there's always this snap of, okay, now we have to get everybody back. It's never like, hey, let's slowly start to think about it. It's always like these very directive. It's like, I hate to say pendulum swings because I use that term so often, but it's like these pendulum swings, like during Hurricane Harvey down in Houston, it was like a lot of buildings and everything were kind of held back. So everyone kind of had this excuse to work from home, rightly so, right? Because some people's homes were flooded and they had to rebuild them and everything like that. And then it's like, nope, got to be back in the office. It's like, okay, cool. Even though the company was like, hey, believe it or not, we're getting work done, from home. Like it was kind of our first taste of remote working, when we kind of had that problem. And then same thing with the pandemic. It's like, oh yeah, like maybe we could do this forever. The same exact thing that would happen in 2017 with Hurricane Harvey. And next thing you know, they're like, nope, everybody needs to be back in the office. It's like, I don't understand the company mantra and mindset. It's like, I don't know if they do an analysis to say, oh, well, we'll think most of the company's still up and running, but then they have these like, you know what? I can't keep track of people as well as I used to. Like, I don't understand why there's always this kind of constant back and forth. And, I think if we're all adults about it, I just admit I'm not well working from home. Like if I'm working from home, I'm either doing YouTube streams, looking at my investments and hobbies, which is reading cash flow statements, earning reports, and stuff like that, playing video games. It's like, I don't want to be working at my desk like for UDoc, right? So when the first opportunity to go back to the office is like, I got to, because otherwise I'm not getting any work done. And I think that there's some people that lie to themselves and say they can work better from home. But I honestly believe that there are some that are able to capably do it and with efficiency, right? I think, they might get distracted. Like you can see when somebody's distracted at work, like I can zone people out real easy. But some people, like somebody starts talking, they like flick their head like, oh my God, I can't believe this person's talking. It's like, we're in an office, guy. Like, so anyway, a little bit of a vent about return to work, but I always find these pendulum swings just so irrational at times.
Yeah, you know what it is? I think for the most part, there's also supply and demand dynamics that have to be taken into account. And the return to work thing is definitely a trend that's there, but it's not like a fast thing that you're going to see overnight with every single company just saying, you know what, screw this, get back to work. My wife is same boat as Matt. She couldn't wait to get back to the office. Yeah. And that's the other thing too. Some employees are actually starting to face fatigue working from home. Like I've been working from home for the last 6 months. But I've been working overnight and I really do miss my team. I haven't seen, I still go into New York once a month here and there, but like I kind of miss the camaraderie. Like they had like a potluck and ice cream social this week and I didn't get a chance to go, it was because it's in New York. So it's one of those things that like employees, they build teams, they build this culture. And I think what it is the idea of work from home is plausible, but there's also some productivity loss that may not be accounted for, not from the employee standpoint, but from the ability to collaborate with people, the ability to like bounce ideas off each other.
Yeah,
You just can't
context.
do,
Yeah, I
so
think
it just
I
kind of
found that a
depends.
lot with my job. It's like that lack of having those everyday conversations where you can kind of keep up, not with the Joneses, but keep up with the business and the constant changing. Is like if you kind of lack on having that ability to kind of hear what the person next to you is saying, and you're all kind of working on the same team and project, you can kind of keep up with, oh yeah, I heard about that. That's going on. And like, you don't need somebody to sit there for 20 minutes and keep you up to date and have that like kind of, so there's that efficiencies associated with that. But I'm with you. It's like the actual work that needs to get done. I could see both, but anyway,
let's take a quick look at this.
Well, the return to office movement picking up steam. A new report says more than 1 million office workers have already faced mandates so far this year to return to the office. Another million are expected to face more requirements in the second half of 2023. Our next guest says the U.S. office market is taking its first steps toward recovery. Joining us now is John Gates, JLL America's Market CEO. John, good to talk to you today. My question to you is, how do you define a recovery? When you consider how depressed the office market has been, how slow it has been to come back, what would a recovery look like?
A return really to equilibrium and healthy market dynamics, I would say. And we are getting closer. The thing about the recovery is it's been very, very methodical, right? On a monthly or quarterly basis. Then we've had some cyclical challenges impact that as well. The secular change where every office worker almost in the world went home in a span of 2 weeks was wildly abrupt, unprecedented, sort of in economic history. So it's been very methodical, but we do see positive signs in the data.
John, do you think we're going to get back to those pre-pandemic levels? And when you talk about the timeline of that, what does that then look like?
We're a couple of years into it, and I think it's perhaps another year. You all just cited the data where there's been actually closer to 1.5 million office workers have had company policies change to return to office for portions of the time, and another 1 million yet to come this year. That's a lot of space, 2.5 million workers, and they're going to occupy at least 100 million square feet, at least a couple of days a week, just as an example. That's a very healthy metric, and it helps get closer to stabilized equilibrium markets, as I said.
You've pointed to leasing activity picking up. What are some of these companies seeking? I mean, we have heard anecdotes about offices, businesses, for example, considering short-term leases because, yes, they want employees to come back, but they don't know how many will come back. They don't want to go for the long-term leases that maybe would have persisted before the pandemic. What are you seeing?
We're seeing just about everything you could imagine. Business people are creative, and so somewhat shorter term space, almost universally new and highly amenitized space. So the absorption figures and the leasing figures for office buildings that were delivered in 2015 or more recently have been actually pretty healthy the last couple of years. It's the older product that's not as shiny, it's not new, and it's not as highly amenitized unless it's been completely redone, where they've really lost a lot of tenant base. Some do want shorter terms. As you know, commercial real estate assets are, the capital stack is long-term capital, so there's only so much room for shorter term income streams around those assets. So some of that gets done, and then a lot of times if you want to be in the right building, you're going to sign a lease that might be 7 years or 10 years or even longer.
John, who is signing these leases? Can you point to a specific sector where you're seeing the most activity, or are you seeing industries across the board bring their employees back?
Both. I mean, you tend to see surges in industry sectors, right, to your point. So in Q1, financials had a pretty big surge. In Q2, energy and utilities have had a pretty good surge. There's a nice, in the scheme of the overall market, it's a little bit of a blip, but it won't surprise you that we're tracking over 1.5 million square feet of requirements for new artificial intelligence companies, and about half of that is in the immediate San Francisco area. So we see all industries methodically recovering, but yes, in any given quarter, you absolutely see an industry surge.
There is, of course, a big question about what that commercial real estate future can look like with debt payments, and whether those debt payments can be made. We spoke to Bank of America CEO Brian Moynihan earlier today. Take a listen to what he had to say about his outlook on that.
Look, that's going to be building specific and city specific, and whether people work. And so, as we do a lot in New York, and you look down the street, you walk out on 6th Avenue outside a building, you get run over by people in town. In other areas, it's not the same. And then there's places, back and forth. And so you've read about San Francisco, a place like that. I think over time, these things will normalize. But I think what we have found so far is we lend to newer buildings and high quality buildings, and those tend to be doing better right now. But I guarantee you, the entrepreneurial spirit of America out there, when the right real estate values come up, people come in and reposition these assets like they've done for many times in the past.
So you talked about sort of the newer buildings, those that are being more creative, and that's kind of what you just mentioned.
Like the ones that SLG has, right, Matt?
Exactly. Yeah.
John,
No,
earlier about your
Sorry.
outlook on that. But are there particular cities that you think will be especially slow for years to come?
Yeah, I mean,
Specific
Brian said it
markets?
very well. It's very individual asset driven, right? Commercial real estate is very asset specific. You've heard of the sunny side of the street in retail. So different cities and different submarkets are recovering at different paces for sure. The age of the building is a very significant factor. The submarket it's in a given market or city is definitely a factor. And then you have a combination of the secular change in the use of space, but also sometimes, you have debt maturities. That's a relatively small percentage of the overall market, but we're in an environment where capital is very expensive, and debt obviously is probably pretty close to peak interest rates. So if you had a maturity right now, it's a lot harder to refinance it than it would have been a year ago. That's absolutely true. So there is a percentage of the market where you're looking at all of those factors and saying this individual asset may be owned at a basis that might not make sense in the current environment, but it's certainly not an overwhelming broad thematic that's out there. It's a very fixed percentage of the overall market, I'd say.
Yeah. I think one of the things that I want to highlight though, and they were just chatting and writing some notes in the chat section about robo taxis, and I'm curious because I know in 10 years time the world will be very different from how we utilize automobiles today, whether that's continued, robo taxis and stuff like that. But my thought process is then you have more and more robo taxis, you're going to have more and more ability to get rid of some of these parking spaces, right? So if you have more utilization of your vehicles, let's say going from a 10% efficiency of using it 1 to 2 hours a day to now having it being a 50, 60, 70, there's going to be less overall cars on the road in the future. And my thought process is that going to mean more office space, or is that going to be more residential downtown? Or because you don't have to drive, does that mean people are going to be more willing to live in town, out of town? And so I think that there's an opportunity to think about that as well, if you're thinking 10 years down the road or so. But I think for now, what you might be thinking about, just listening to that call specifically, Chris, was you were kind of seeing a resurgence in some of these technologies that might be coming through, whether it's semiconductors, whether it's the AI industry. And with that, you're probably seeing an opportunity in San Francisco that folks might be reshoring some of the things that they have previously moved to Taiwan or might have moved to Asia. And that's kind of my question is that one of the key industries where you're like, well, there's going to be a lot of money, whether that's government money or just venture capital money that's going to be going into these opportunities, and that's going to lead to commercial real estate needing to be used.
Yeah, and there's also parts of other portions of real estate that if you don't want to be in commercial, but you want to have like exposure to a growing industry that's cash flowing, like one of them is data centers for AI specifically. it's a big growth area for them, So I'd say that, there's a lot of way to skin this cat. I think a lot of people, they focused a lot on just these unprofitable companies, and they only want to look at that. And I'm like, no, you got to look at the sectors that no one else is talking about, because those are the ones that can really like juice up revenue. Juice up your portfolio with a lot of great returns. I'm going to play one more video real quick. But this one is specifically, I don't know if you know who Sarah Go is. Sarah Go. Okay. She used to be a partner over at one of the large venture funds over in San Francisco. And she's really good. She has a lot of connections to a lot of founders within the city of San Francisco. And yeah, I think it's she actually explained some of what the trends are in the city that's actually worth looking at. So let's just play that real quick. Hold on one second. Let me just share my screen.
Half of venture backing for AI startups went to startups here in the city of San Francisco. Do you recognize that as being a genuine trend, the concentration of AI talent here in the city?
Yeah, I think it's a reflection of how early we are in this market. There is great engineering and entrepreneurial talent all around the world. I've been on the boards of startups, with Israeli founders, European founders, all around the United States. But at this particular moment, AI and this generation of it is very early. And a lot of the talent that was sort of working on the frontier of this technology was focused in a few large research labs. And those labs were staffed in San Francisco and London mainly. So I do think that, the AI boom has benefited from that research talent, and is partly also to do with sort of the renaissance of San Francisco.
I ask you that because you and I have spent time together in your offices. You launched Conviction and you opened a physical office space. But since last we spoke, you also launched Conviction Embed, essentially an accelerator for AI startups. Tell me about that. What prompted the move?
So we think this is a unique moment in time. As we were just talking about, this is a very early stage of the AI market, and we want to bring people together at this frontier of technology because we think they are solving a lot of new problems, and some of those problems are very common, right? And so an example might be hardware and infrastructure is hard again for startups. Thanks to the cloud players, they haven't been hard for most startups for a long time. But if you are a company that needs to train or serve your own models, that's very challenging, right? And so people talk about the AI GPU crunch. And so one of the things that we were really trying to do is focus on the set of challenges that AI native companies face, bring people together who want to work at the vanguard, and then also make it possible for companies to experiment, right? And so we're giving people enough capital to get going, $150,000 on very friendly terms, and then partnering with Microsoft, OpenAI, Anthropic, and Base 10 in order to sort of make it possible for people to experiment as well from the hardware side. And so I think it's in part because we think this is a really special moment in time. We want to bring together some of that vanguard community, and in part because we think we can bring our network together and people will solve unique problems together. So today's actually the last day of application. So AI entrepreneurs, I hope you'll apply.
Well, let's linger on that for a moment then. What is it that you're looking for? If you are going to get a new wave of applicants that are watching Bloomberg Technology right now, how do they set themselves apart? What is it you're seeking to unearth?
Yeah, I think the fundamental thing that we are looking for with any entrepreneur, besides the core entrepreneurial traits of, grit, the enthusiasm and deep understanding of a particular problem space, is actually experimentation today, like openness to new ideas and new experiences. And I think a more expansive view of the markets that can be disrupted with AI, and then sort of deep understanding of how the research and technology apply. I think one of the most exciting things about the opportunity to us is the fact that we don't look at the markets that are available to AI as just traditional software companies.
I'm going to stop here. I'm not going to play the entire thing because this might be a bit much. Just one thing I'm going to really quickly address that's in the chat. don't be a dick. Like, really, don't be a dick. Like some of those comments, yeah, whatever. You want to make one or two like slight-handed jokes, that's fine, but don't do that, because all you're doing is bringing toxicity to this stream. And what ends up happening is now people are going to dogpile on it, and this is going to end up becoming something that's, you know, that's not good for anyone, dude. All right, so I'll be straight with anyone who wants to be a dick. Just don't watch. I don't mind. I don't give a shit about. I really don't give a shit about this as a medium that and to put up the comment, because I think it's worth putting it up there. Just put the comment up there, like the happy end, like the happy ending thing. It's like, can she give a happy ending? Like, why would you put that? What did you gain? Like, I get the trolling thing, but that's no, don't do that, because you're just gonna make this.
It dilutes.
Like I said,
one thing I would, I applaud you for that. I mean, it dilutes the hard work that you're putting in, right? Because then it makes us seem like we're here to try to do fart jokes and jack off jokes, and that's not really what we're here for, right? I mean, we're here to show due diligence, and Chris is putting on a really good show, and I'm learning a lot from this conversation. And you know, I understand it was kind of meant in jest, but at the same time, you know,
the other thing is, if I don't address it and we don't address it, what ends up happening is anyone else watching the stream, especially who's like, you know, a female or whatever, and they see that we don't address this is like, to them, this is like, hey man, I'm trying to learn too. Like, don't turn this into something it shouldn't be. So look, I'm all for jokes. You can make fun of my appearance. I don't care. You know, I'm not particularly handsome, Chris, even though my mom would say I'm very handsome, but I would say,
Chris,
I appreciate that. I appreciate that. But yeah, but just, you know, ease up on what's funny is she can't even defend herself against those comments. It's not like this is a live stream. She's just a person, but she's a very intelligent person, by the way, who's one of the people actually trying to make a difference in San Francisco by bringing some of the money back into San Francisco and the tech community back into San Francisco. So all the shit that you're seeing with like all the bad policies, like people like her are the reason why things like that are probably going to change in the future. You know,
so, I'll say one of the things that I saw on there that was pretty interesting, and I know this one will hit home for you, Chris, was I saw Neva on there as one of her investments, and they just got picked up by Snowflake. So
yeah, actually, what's funny is the reason why I know of her is because she used to work at Greylock. She was a partner at Greylock who was actually familiar. Frank Slootman used to be a managing partner at Greylock as well. Yeah. So yeah. So it's just one of those things that, like, you know, this community is in the tech sector, very, very like close-knit community that really does talk to each other, but they also have a little bit of respect for their home turf, which is San Francisco. There's more innovation that comes out of San Francisco than ever. Even I will agree that some of their policies though are pretty stupid, but you know, it's just some of them are just really ridiculous, to be honest.
Stupid is in you mean like the political policies, or you mean the business policies?
No, the political policies that are just like, you see the consequences of your stupidity, yet you double down on it. Like this whole thing with like not letting prosecutions for like under $700 worth of theft. So now everyone just goes into their local Walgreens and just takes whatever they want, and you can't do anything about it. And the cops are pretty much all neutered at this point. Like I was watching an interview about how their like DA was actually it wasn't like framing cops, but basically there was evidence that a cop was like involved in like some kind of issue with a suspect, and it would have gotten the cop off because of what the suspect did, but they kind of left that portion out, and they tried to actually prosecute one of the police officers. And so believe that was a fucking DA that did some shit like that. It's horrible, dude. So like these are the
crazy,
kinds of
man.
people.
It's crazy. And it goes back to what you were saying about, you know, the policies and like Walmart is leaving Chicago. Like how crazy is that? Like a company that prides themselves in providing affordable goods to people has been so struck, not only because they've started to close at a reasonable hour so people can't come in during the middle of the night and steal stuff, but leaving entire cities as a whole. And you're continuing to see other companies do the same. It's just like, well, I'm with you, Chris. I'm starting to see this this political agenda that, people were kind of saying free, 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 and, damn the police and all this stuff. I'm starting to see the pendulum kind of swing back a little bit, because I think people recognize, like, maybe we spun the pendulum too far, and we need to kind of come back towards a middle ground. And I agree with you. I think it'll be anyway.
Yeah, we addressed it at, like, I was gonna just reply to the comments about, like, Amit's thumbnail thing, because that was actually somewhat controversial. A lot of people felt some kind of way about it. We addressed it, but we did it more on a one-on-one level with Amit. We didn't, like, we tried not to let it become like the topic of conversation so boldly during the thing. I mean, we disagreed with it when we saw it, but it was kind of like too late for us to do anything about it at the time. But it's one of those things. He's a young guy. He's going to live and learn. And the same thing. I'm sure I'm going to say some dumb shit one day too that people are going to hold over my head. That's what happens.
I do it all the time. I mean, unfortunately, at this point, I've made God knows how many videos, of which, I used to make 4-hour live streams back in 2020, 2021. And I'm sure, people could go through those and clip something and make it seem like that there's anyway. So it's interesting. I think with this, I appreciate your feedback as always. And, I kind of just shrugged it off, but you're right. I think you let that sort of fester and it kind of goes down a rabbit hole. So I appreciate you speaking up.
Yeah. I'm probably going to keep doing some more due diligence, but if the opportunity comes and I see it, I don't mind bringing up on this conversation where we can actually do a real episode where we can do due diligence on the company that I'm looking at and just go everything based on where do we start? What are the metrics we're looking for? What kind of changes are we seeing in the headlines, and why this would be a good investment? And from a risk to reward standpoint, why it would be a good time to get in now versus waiting another 6 months or a year or whatever. So, this is something that we'll do in the future. I'm still doing my due diligence on it. It's going to take some time for me to do. I have like a lot of stuff going on right now, but I actually encourage people to do some research on commercial real estate. It's an unloved sector. What Buffett says, when people are scared, usually get the best opportunities. So I'm not saying go and buy every commercial REIT that's out there, but there are actually some that are trading at way below book value, that have really high quality assets. And if you're willing to put in a little bit of work, do a little bit of research, you can be like me and Matt, getting monthly checks.
It's mostly you, man. It's mostly you. But I do, I've gotten a lot of great feedback, and I want to say a lot of this was Chris's idea and also a push from Amit. So, Amit's like, you need to do more. And then Chris reached out, and it's kind of been something that's worked out really nicely. But at the end of the day, Chris has a lot, I don't want to say free time, but Chris puts a lot of effort and due diligence into these. I know he doesn't have a lot of free time. He probably is like me, where his hobbies is looking at companies and making money. I think it's just something you kind of get bred into and learn to love.
It's in my blood. It's in my blood, man.
It's in your blood.
I'm a Guju.
I your dad out of
it's because I'm a Guju Patel. Like, okay, so the thing about like my community / cast, we are all like money. No, I mean, we're all hotel owners, gas station owners, Dunkin' Donuts, Subway, bro. You name it, we'll do it. Like a Gujarati person, which is what I am. We wake up in the morning, we need to figure out how to make more money. We go to sleep at night, man, I wish I had a few more hours. I could have made some more money. Go to sleep, and then we wake up in the morning, man, this fucking sleep thing, I got to figure out how to do less of it so I can make more money. That is the mentality of a Guju person, So whenever you go to like a motel and they're working like 24 hours, you literally, the same guy that you saw last night is the same guy working. That's because he's probably a Guju person. He's like, I could hire an employee, but that means I have to pay him. So fuck that. I'll goddamn work another shift. I'll work 2 shifts. That's how Gujus are, man.
I wanted to also say, I mean, I think what a lot of people need to recognize is the amount of due diligence that Chris is putting in, right? And so when he says do some due diligence on commercial real estate, he doesn't mean spend an hour or two looking up ticker symbols. He means getting into the financials, looking at the earnings report, looking at their debt maturity schedules, looking at all that stuff that they were mentioning on the call earlier. Just that Chris was bringing up with that older gentleman. and actually looking at it and be like, does this make sense? Look at the book value, look at the assets, look at what type of properties they are. That's what KRIS showed me about SLG, and that's why I fell in love. And KRIS also did the same with a bank ETF. I won't say which one. I don't know if he's released that privately on his Patreon or not. And I was scared, right? I'll just be blunt, because it had a little bit of leverage to it. And I looked at it and I was like, I don't know. Like, is this going to be the one time in a blue moon that KRIS is actually wrong? And for a week or two, it actually continued to go down after he kind of talked about it. And then it's as simple as this. It's as simple as forgetting about it for 3 months, and that same ETF is up 80%. So it's when you think about these things, you need to take the opportunity when it's given to you. And a really good quote that Buffett said, and I've said it before, and I'll mess it up, and KRIS can kind of correct me if I'm wrong. If you only get 10 swings of the bat, you can have unlimited strikes, right? Unlimited balls are coming across the plate, but you only get 10 swings of bat. I guarantee you're going to make a lot better financial decisions than if you were able to basically only have 3 or whatever the fuck it is. But anyway, you would actually sit there and say, man, I only have 10 investments my entire career.
Yeah.
So the ones I might need to do, got to make them count, do my due diligence, and swing when it counts. Otherwise, like, I think that we get into this place where it's so easy for people to buy and sell stock that we're just like, let me buy it. Oh, let me, it's so easy. And unfortunately, that makes it so easy to lose money as well. Because someone's like, oh, I've heard of Skechers before. Let me invest in Skechers. Like, Skechers is like on the verge of bankruptcy every damn day. Like, why would you buy Skechers? Like, it just, So anyway,
it's funny because Charlie Munger was actually asked about Patels, and he actually addressed it, and it's hilarious.
Hotels from India that buy all the motels, they know more about motels than you do. They live in the goddamn motel with their family. They pay no income taxes. They don't pay much in workers' compensation. And every dime they get, they fix up the thing and buy another motel. You want to compete with the Patels? Not I. Those Patels from India.
That's what it is, man. I can't believe Charlie Munger was like knows about that. But it's in our blood, dude. That's the level of stuff that we like Patels do. And some of the comment section is absolutely right, dude. Patels won't show you that they're wealthy. They all like hide it very well. But I can tell you one thing: the next generation is gonna fuck all that stuff up. The Patels that I know, like my cousins, like my uncles, and like people that I know, they worked their ass off and they built all this stuff, and their kids, they grew up in a really spoiled environment with the parents working all the time. So dude, most of them are just chilling, man, chilling, and I know that this is like the shirt sleeves to shirt sleeves kind of thing. So that's probably what's going to end up happening. Some of my cousins I know, I'm like, bro, you better figure out what you're going to do about all the empire that your dad built. He's like, man, I don't want to fucking go manage all those stupid motels. I'm like, but dude, here's one of my cousins, his dad owns like 17 different properties. Okay. He has no interest in running the thing whatsoever. Right. 17. The guy generates literally monthly $1 million in income, $12 million a year in income. And the guy doesn't want to do anything with it. It just wants to live with his girlfriend and just get high all the time. And it's like, come on, man. Like, and so it's really sad because the next generation doesn't have that same level of work ethic. And eventually things will, I don't know how this is how it works. Everyone does it. Like, I know plenty of people, like Koreans do dry cleaning. Koreans love dry cleaning, right? Vietnamese, they do nails and the nail, pedicures, that, and same thing. I think the Chinese do that. It's just each race, especially like the immigrant communities, they all come into the US and they figure out what they're good at. And they just kind of like, just monopolize the entire industry.
And that's the thing, man. I mean, when I was in Trinidad, I think I said this the other night, somebody was in the chat talking about, getting an education and what should they go back to school for. And I was like, you don't need to go to school. You could be a plumber, right? You can go to trade school. You could be an electrician and literally have your own business and do really well. You're going to have to work your ass off and figure out how to, manage all your clients and their schedule and stuff of the like. But you can make a lot of money doing that. And I don't think that people recognize that you can do these trade ships and stuff like. You have people more like me that want to become like an engineer. And the thing is in order to live an above average lifestyle or get some above average paper in your life, you have to do above average shit. Like it's literally that simple. And I think a lot of times people are like, I just want to become rich. And it's like, okay, cool. Well, how are you going to do that? And they're like, well, I don't know. Let me go on this trip. It's like, you don't have money to go on the trip. Why are you going on the trip? Right. It's like, and then they're like, I just don't understand how I'm not rich. It's like, you remember when I told you to put like 10% at a minimum into your 401k or anything? I'm like, yeah, but like, it's just, well, it's, then you have the same people like, Matt, I don't know how you have so much money. It's like, I've literally been making YouTube videos for 7 years about why I have so much money at this point. People are like, all I have is $100,000 of equity in my house. Like, I don't understand how you have this large portfolio. It's just like, I mean, I don't change my car every 2 years. I don't like buy all this stupid shit and like give it away after like a month or two. I would, for anybody that's listening to this, I would just say, don't just live by the everyday sort of 9 to 5 sort of mentality that a lot of people have. Put some real rigor, due diligence, and think harder. Think smarter, not harder. Right. And I think a lot of times that's what I guess I can't say not harder because, like Chris is saying, the Guju people they live in the hotels and they just do God knows what. And, buy all the Dunkin' Donuts and all that stuff. But what I mean by that is if you find something like, luckily for me, my hobbies are like investing. And so it kind of sucks in that respect, like, because it's hard to compare to that. But say I see a lot of people, family members, and they want to go on trips and then they want to buy hobby stuff and they want to go buy. And it's like 90% of that shit sits in the garage and only gets used once, if not at all. I remember my sister, I don't really like to talk about my family, especially in a poor note, but she made this big stink about buying a cornhole set for my nieces and nephews. They haven't used it once. She was just like, if we buy this Airbnb, because I'm looking about buying an Airbnb with my sister, she's like, yeah, we'll put the cornhole set down there for them because we don't even use it here. And you just look at all the other stuff that they have in their garage. Thousands upon thousands of dollars. And I'm not just talking about their garage, anybody's garage. Thousands upon thousands of dollars of stuff that they bought once. They thought they would use it. They never did. The thing that you could recognize, find a hobby you really like. Say you love to go fishing. Buy a nice fishing rod every few months. But don't go and buy an ATV or go buy a snowmobile or go buy like things that you might use one time. Like if you find that you're renting ATVs all the time and you like ATVs, maybe that's your thing. Go buy an ATV, but don't go and buy like a motorcycle or like a sports car and all this stuff. Like people are so whimsical because the lifestyle these days is so easy in the United States. And then at the end of the day, they wonder why they don't have enough money. It's because they're making poor business decisions, being like, well, let me put down $15,000 on this depreciating asset of a car. It's like, well, that's $15,000 down the drain. Might make sense now that interest rates are 7%, but back when you were only at 1 or 2%, people were like, I bought the car cash. I'm like, you're an idiot. Like, I don't like it's I don't know if I'm saying anything that you think is completely wrong here, Chris.
No, I totally agree.
On a monologue, but I think people they're too easy, and I don't like to get too philosophical. But one thing I will end on, and I'll hand it back to you because I always like hearing your thoughts. I listen to Jim Rome a lot, who's a motivational speaker and talked and mentored Tony Robbins, and his mentor. It's a really good speech. I should kind of do like I've done it on the channel before, but I should bring it back up. He had his mentor, Jim Rome's mentor, said, write down 20 things that you think are wrong. He's like, okay, cool. Because he was asked, he was like, how do I get better at this? How do I get better at that? How do I? And he was just like, what's wrong with the world, right? And go off and think what's wrong and come back as to why you're not doing well. Okay, cool. Jim Rome goes back. He's like, okay, taxes. I'm not doing well because of taxes. I'm not doing well because the weather sucks. I'm not doing well because my car broke down the other day. And he gives it back to his mentor. He reads it, sitting there, nodding his head along, going through the list one by one. He reads all 20. He's like, hey, Jim, hands him back the list. He says, there's one thing wrong with your list. And Jim's like, really? Like, these are really good reasons. I don't understand why. He's like, yep. He's like, you're not on it. Your biggest problem as to why you're not doing better at life or being more successful or adding more value to the marketplace is you, your own personal self, your own obstacles that you put in front of yourself. The sun rises every single day and sets every single night.
Yeah.
After winter comes spring. After summer comes fall. Every single year is the same. And really, you're just like, well, I can't do it this year. Fall's coming. And, you know, it's like, oh, I really wish I had more time. Everybody has the same amount of time in a day. Everyone has 24 hours. Figure out how to make it work.
Yeah.
And so I really love that one. I botched it, and Jim does a really good job articulating it. But you know, everyone's just like, man, I really wish. It's like, we're all the same. This world was built by, and this is an Ashton Kutcher line, but I think he stole it from somebody else too. But it's like, the world was built. I think he might have stole it from Steve Jobs, which I think he did the Jobs movie, which is why he remembered. But he's like, the world was built by people that are no smarter than you, and it's so true, right? Like nobody's. I mean, Chris, you're a fucking bright guy. Let's be front, but it's like you taught all this stuff, a lot of this stuff to yourself, or maybe it's just in your blood. But
I was a B+ student, bro. I wasn't that smart.
But that's the thing. I mean, like, I'm not that great, right? Like, I might be witty, but somebody can always outwork me, right? For as much intelligence or anything that I have, somebody can always outwork me. I can get lazy at sometimes. So in that respect, man, like if you're not doing well, there are the chances that some people might be truly unlucky. But a lot of things you can get by working harder, working longer, being smarter about how you work rather than just putting in more time. And especially when it comes back to the investing game, and I'll hand it back because I know I've kind of gone on this monologue, but the thing that gets me a lot is seeing newcomers in the FinTwit space or on YouTube really thinking that it's about luck, and they'll just buy a stock because somebody on YouTube said it and have no idea from a context reason what time horizon that person is, what perspective that person's buying that stock on, and just assuming, yep, it's going to go up and to the right. That person could have caveated, and I hear this all the time. They said, this is a 10x opportunity, but it could also go to 0, and people don't hear the second half of the sentence. They shut their ears off. Next thing you know, they put 80% of their portfolio into it, and they lose $100,000, and they say the stock market is rigged. It's like, well, who's really at fault here? The person. I do this all the time. I say this thing could go to 0. I mean, you know, I don't just joke about that. I'm honest sometimes where I'm like, this thing's got a lot of risk. It's still not making all the money. And, you know, some people, they might be rah and hype up a stock like that. But, you know, I like to present the risks and show people that they're, you know, not everything is perfect. But a lot of times on FinTwit or YouTube, people don't listen to the second half of the sentence. And sometimes the second half of the sentence is the most important, even though it's not the most fun. So,
yeah, just two things. One, can you highlight this thing that Dex put up over a month ago? I had a SIG that. So Dex, probably Dex Invictus. He's like he's a long follower. Like I've seen him so many times post on Twitter on Amit stuff, you know, on the Finance Junkie stuff. Dex, congratulations. There is no better investment that you've made. I was an X-ray tech when I was well, technically I still am an X-ray tech because I'm still certified, but I started off as an X-ray tech. And one of the most disheartening things that I saw during my time working in this field was chest X-rays and CTs of people who were smoking, who were young. Like when you see a young person and their lungs had all sorts of pleural fusions and all this crazy stuff happening in them, it's horrible, man. Like, and it's because, and the thing is, like, most of them don't even know how serious of a problem that they have. They just think it's a minor cough when you look at it, and it's just like, holy shit, you know. And then you can see that they have like the Newports, or they'll have the Marlboros and stuff right next to them, and it's one of those most disheartening things. So no better investment you can make than stopping smoking, man. And it's not just the money, but over your health too, you know. The other thing that I wanted to just bring up was that, you know, even when it comes to making money, if you are somewhat successful at investing and stuff, you know, everyone has to have a vice. I think that that's a normal thing. If you become cold turkey and you do like you just wake up in the morning and you're like, man, I'm going to save every single dollar possible. I'm not going to spend money on anything other, like every single thing I'm going to audit. Dude, that's not a life worth living. You have to spend a little bit on things that really make you happy that may be something of a waste. Like, I'll give you an example. My wife, she loves Starbucks. Okay. I think it's a waste of money, to be honest with you. I'm like, man, it's like $6. You can just make the coffee at home. It's not that great, but it's one of those things that gives her joy. So I never mind her spending the money. And shit, I join her. She got me into vanilla blonde lattes. Bro, I love vanilla blonde lattes.
Never had one. That sounds dope.
You never had one? Vanilla
No.
blonde latte with oat milk and 4 pumps of vanilla. Oh my God. Oh, great. So can I cut that out of my life? Of course. Should I cut it out of my life? Of course. But then it's a small reminder of my success for me. So, and it's there's a lot of bad shit that I could actually be doing. I could be smoking weed all day. I could be, drinking drinking all like booze all the time. I don't do that. I have very few vices. I think one of the vices that I can tolerate is just a coffee habit. But everyone has to have a little bit of a vice. Me and my wife, we also have another vice. We're fucking degenerate gamblers, the two of us. All right. I mean, she's worse than me. Though.
What's the game? What game?
So she fucking loves scratch offs. Oh my God. Like, I know scratch offs are like a waste of time, but she loves them. So like once in a while whenever we go on like a trip anywhere, like a long distance trip, the habit is we always go, we just get a couple of scratchers and, she'll scratch one, I'll scratch the other. And, there's been times where we've actually won quite a bit of money too. So that's been kind of interesting, but so we do that, so you can't live a life where you're not having some fun in it as well. So scratchers. And then we have like an annual trip where we go to Las Vegas, every year we just go to Las Vegas one time. We come in with, a few $1,000s. We never have like a lot of money. We're not degenerates to the point where like, hey, let me go to the ATM a few times. No, it's just, we come with a set amount. We enjoy ourselves. She'll play roulette and, I tried teaching her craps. So
Craps
she plays
fun,
a little
man.
bit of craps. Last time we went, we were like, screw it. Let's play some slot machines. And we won a lot of money. So this year we're probably going to play a little bit more on the slot side of things as well. And yeah, just one of those things about life is that life is like, if you're making all this money, but you're not enjoying any of it, what's the point? So, it's just one of those things I just wanted to bring up. So go ahead and enjoy some of the returns that you've had, but understand that hard work allows you to have fun. If you don't put in the hard work, the enjoyment that you'll get from the rewards, it doesn't feel right.
Right.
Anytime I have extra and I made good money, I made extra money, it's like a reward. And so it feeds my reward center, like with the brain. So I know chemically it's like, yeah, I want to keep working harder because I want to keep doing all this and I want to keep going back and forth. So it's just one of those things that like, I just wanted to bring
It's
up.
opportunity cost, right? It's like, if you have, let's just say $500 a month to spend on something you love, right?
Yeah.
Why would you spend a portion of that $500 on something that you don't care about just because it's at Target? Or it's like, if what makes you the most happy, that daily Starbucks or that once every couple days Starbucks, or in your case, that scratch off every couple days, right? It's like
not every day. No. It's like once.
I know. I'm just making an example.
Once a trip, like maybe like
you're the one that said
every other month.
Man. You're the one that said
no, not at that level. If I go to my wife's car and I see a bunch of scratchers, me and her are gonna have a talk. This is just like one of those things. Like if you're going on a trip, let's get a couple of scratchers.
Right.
Yeah. She gets it from her mom because they used to own a liquor store, and one of the things that they had was like the scratching things right there. So I remember anytime I'd go to the store, her mom was like, you know what? I feel like that's gonna be a winner. That's a lucky one. And she would go and she would scratch it. And my father-in-law would be like, what are you doing? Like, so it's funny, like at the end of the year, we'd be like, oh man, the lotto income that you normally get was all just a wash because my wife's mom would be like scratching all the time. So like that. So what's funny is when my mother-in-law is here, I'll actually go and I'll get a scratch off for my wife and for her as well. So it's like
That's love.
both of y'all can have fun. Go ahead, you know.
Right. But I mean, it goes back to just saying, like, don't just spend aimlessly, right? I mean, think about the cost benefit analysis and of specifically focusing on the thing that makes you the most happy, right? If fishing makes you most happy, spend that $500 a month on a new fishing rod or bait, or going on, you know, renting a boat to go offshore. Don't spend $1,500 on things that you don't even care about, that you end up having to take up more time and eats away at your fishing time. You're spending more money and you're not getting the most benefit for your dollar. So it's not about like, and I think what Graham Stephan always preaches, he's always talking about iced coffees and stuff like that. I don't think it's necessarily about the iced coffee, exactly what Kris is talking about. It's about making conscious decisions, being like, if I am going to be putting my money somewhere, do I really want this $5 coffee, or am I okay making it at home? And, you know, in the case of Kris, it's like, I drink because I'm too lazy to make coffee in the morning, I'll just grab it on my way into work, which I don't go to the Starbucks on the road. Luckily we have a kind of like a cheap Starbucks, like licensed store in our building. But it's like, you know, I'll grab that $2 cup of coffee. It's not that big of a deal, right? As opposed to, you know, so to me, it's just like that convenience of making sure every night that I have to have it. It's just like, if I just have to spend $2 and have coffee every day, yeah, it's $700 a year. Or I guess I don't work every day and I don't drink coffee on the weekends, but let's say 4 times a week, it's $8 a week. It's not that big of a deal, right? I can handle that. I've afforded that luxury. But at the same time, if you're doing that and you're getting the big frou-frou stuff at like $5 a pop and you get it every day, and then you also drink a bottle of like $90 liquor every night, and, you know, you go on trips more than you should, and then you start adding all these things up and it's thousands of dollars a month. You know, you might want to be like, what makes me the most happy? If it's Starbucks, keep the Starbucks every day.
Look at Buffett. Like someone said, Buffett. Yeah, Buffett, man. This dude drinks Cokes. He's like 90 something. He still eats Cokes. And I think McDonald's or Wendy's or something, dude just loves, or Dairy Cream. And everyone's, like I said, everyone's got to have something going on with their life. I'll stop this whole diatribe with just a quick little joke. So this guy goes to the doctor and he says to him, it's like, listen, hey doc, I have cancer. Can you help me? And this is the best cancer doctor in the world. He said, can you please save my life? The cancer doctor says, okay, fine, but you're gonna have to answer some questions really quickly. So the guy says, okay. It's like, have you ever smoked a day in your life? So the guy says, no, I've never smoked. It's like, have you ever done any drugs? It's like, no, I've never done any drugs. Have you ever like had, have you got, do you drink alcohol at all? It's like, no, I never drink any alcohol, right? It's like, have you ever had unprotected sex? It's like, no, I've never had unprotected sex. And so the doctor is like, what are you doing here? You're already fucking dead. Because apparently you've never really lived a day in your life. Get the fuck out. And then, you think about that and it's like, yeah, what are you fucking like living your life for? I'm not advocating anyone do what I just listed above, okay? Not saying you should go out and do that. But man, let me tell you, I have experienced life. Like, I didn't do hardcore drugs. I didn't go like, oh, let me just do a couple of lines of coke. But it is on like the bucket list. I know that when I turn a certain age, Matt, I'm going to be fucked up. I told my wife, if you die at any given point, like when we're older, I'm just going to go and gonna go ham on this world, man. Because at that point, I'll just be alone with nothing to lose, bro. I'm gonna try every hardcore drug there is known to man.
Go on a vision quest,
bro. I'm gonna
go to the South American dungeon, or not dungeon, South American
ayahuasca.
And,
I'm gonna broaden my horizons because at that point I got nothing to lose, So just letting y'all know, hookers and blow. That's right. So
what happened to Kris? I think he died in Thailand last year. Did you hear about that?
Yeah, but I'm just saying this. I told my wife I'm going to do this too. It's not like it's like news to her. Like, honey, listen, letting you know, while we're married, I am going to be a good guy. I'm going to take care of everything. But the minute anything happens to you, and I'm at a point where you know, my dick doesn't work, I'm gonna pop in a couple of Viagra's and get me like, just lock me up. Yeah, I'm gonna get some Hims. I'm gonna lock myself up in a hotel room in Thailand with some lady boys and some real women, and you know, just
Because
figure
I never
shit
tried
out.
it. I gotta try it. I don't know.
Figure it out. You know, just
Figure it out.
I'm just saying, I want to experience life, just not right now. I just
Right.
way later down in life where I got nothing to lose. And then, you know, I'm pretty sure if there's a heaven, I'll go up. St. Michael's gonna look at me. He's like, bro, that last year, what the fuck happened?
It's like you were on a good path, man. You were a good Gucci boy.
It's like you had the ticket. Everything was working for you. It's like, look, man, I'm gonna say to St. Michael, hey, is it St. Michael? Who's the angel that lets you into heaven? Who's like your last person? I don't know. I'm not a Christian.
Yeah.
I'm good. I'm gonna get reincarnated. But just in case, if the reincarnation plan doesn't work, in terms, and if there's actually Christianity, and they ask me like, hey, I'm just gonna be like, yo, I believe in Jesus. I'm allowed in. That's the only criteria. That's what y'all told me for the last 80 years. All I got to do on my last day is believe in Jesus, and y'all have to let me in. So I know the terms. I did my due diligence on Christianity and the Bible. St. Peter, thank you. I appreciate that.
But I mean, it always goes back, right? What are we doing all this for, right? You have to have some sort of objective, right? If your objective is this, make money, you're probably going to fail, right? You need to have some sort of love and reason why you're doing it. Is it to buy your time back? You know, at the end of the day, to me, it's about having the independence and opportunity to live a lifestyle where I can do it. Like, I love doing this stuff. You know, if I didn't like it, I'll just be blunt. I've been doing YouTube for like 5-6 years. If I did it for the money, I would have quit a long time ago, right? I do it because I like the vision, the opportunity to share with people. That's what makes it worthwhile to me. If I was doing it for the money, trust me, you can see I have a catalog worth of videos that don't have a shit ton of views. All right, there's 100 views here, 300 views there. Doesn't really bother me. I'm more here for the documentation of it, to meet great people. The amount of people I've met through YouTube is phenomenal. I met KRIS, I met Amit, I met all these guys just through talking on YouTube. And anyway, it's just it's a fun journey. But I do it to eventually do what KRIS is talking about, which is have that opportunity in 3-4 years.
Hookers and blow. Hookers and blow.
Have that opportunity in 3-4 years where I'm like, you know what, I'm leaving corporate America. I'm going to take a couple months off and start my, you know, entrepreneurial career and go on my vision quest. I'll be back in a couple months. And then you might not ever hear from me again. But other than that, hopefully I have a good, successful entrepreneur YouTube career. But anyway.
Yeah. No, it'll be interesting, man. Let's see where this goes. I hope everyone enjoyed the stream today. You know, I sometimes I'm serious when it comes to investing, but I'm also a very lighthearted person, you know, and this is the kind of stuff that like makes me want to keep doing the work. It's, if you guys think it's the money, the monetary side, dude, I could figure out how to make the money without it. Like, we're not really making it. I think a lot of times people think that, oh, YouTube, you guys are making a lot of money. Like, bro, me and Matt, we probably work in highly specialized fields. So if we just put like 2 hours of overtime in, bro, we would make way more than this.
I wish
you
I
know
got
what
overtime.
It is.
I don't get overtime. You get overtime.
Hey, you're in a salaried position. No, I don't get overtime right now, but I do get a bonus. So that's the only thing.
There you go.
Yeah. So, but I will say this right here to me is better than therapy. I think so many people in this day and age, they don't have people that they can talk to about certain things. And so that's where people feel this sense of loneliness, and it fucking drives people nuts.
Agreed.
And that's the one thing I like about the YouTube, that, you know what, I'm getting to experience talking to another human being who has the same interests that I do. Because my friends, they don't, bro, I could talk to them about stocks and they'll be like, oh, look at KRIS again here with the guy, stock guy over here, stock guy. Hey, what's up? You know, and they want to change the subject so fast, it's not even worth trying to bring it up. So, you know, so I'm glad that we have similar common interests. And this is a great, and thank you everyone in the chat. Your participation is always welcome. When you guys actually, you know, chat, type in stuff, we're actually looking. We may not respond right away, but I'm
flashing it up, man. I'm watching every single one. I watch everything that you guys type, and I do want to say, I used to have a community that was a little bit smaller than this about a year or two ago, and to me, you know, the thing that I eventually want to get to is have the opportunity to meet up with folks. Like, if I have the opportunity and I'm living, you know, I have a few rental properties, and live independently and travel a little bit. I think that that's something I definitely want to do. I want to eventually make a traveling YouTube channel. It's not going to be high quality, right? I'm not going to be like, you need to do this 5 things when you're in Thailand. I'm like, hey man, that's going to be a quick vlog channel. I'm in Thailand. This is where I'm at. I love it. Or I'm in Vietnam, or I went to the Maldives. But at the end of the day, like I wish and hope that I have the opportunity to say, hey, I rented out this resort for 15 people. If you guys are going to be here in August or have the ability to be here in August, your housing is on me. Right. And if I know you, of course, if I don't, then I'm not going to give you the address, but otherwise, I mean, you think about it, once you get to a point where, what's $1,000, $2,000 to live a life, have a great week and meet new people that are interested in investing and having great ideas and great conversations, then, some people like, I don't know, I just don't get the sports talk to some extent. I'll watch it, but I don't keep up with it as much as I should.
It just depends on the person. It just depends on the person. Like some things are enjoyable to some people and other things are not. Like I like sports, but like not to the degree that my brother-in-laws do. Like they love it to death. They can talk about stuff all day long, and I'm just like, it goes way over my head. Right. And they track multiple sports. I'm more in the stock market. So if I talk about it, it goes over their head. So that's why you have to look for the outlet, and you have to try to find the community that's also in the same kind of like zone as you, as interests, and you build it up. And a lot of what, by the way, if anyone thinks that what we're doing right now is scripted, zero script. Okay, nothing. Literally, we found out what we were going to talk about 5 minutes, not even 5 minutes, like a minute before we went live. So that just goes to show you that a lot of stuff that me and Matt are talking about, it's coming genuinely from here. So
it's mostly Chris. I just listen and nod and ask interesting questions.
Yeah, I mean it's you too, man. Don't undercut.
It goes back and forth, but I'm always intrigued about your mindset. But all right, my friend, thank you, and we'll see you guys next Monday or Tuesday. I'll figure out. I don't know if I always get confused if we're doing this Tuesday through Thursday or Monday.
Let's do Monday. Let's keep it with Monday through Thursday and do Monday.
Are you on anything tomorrow, or are you taking tomorrow off?
What is tomorrow? Tomorrow
Friday.
is Friday. I will probably do Palantir Weekly. I'll see. I'll let Amit know. Yep.
Very good. All right, my friend. I'll see you.
Take care, everyone.
Cheers all.
Bye.